What's up, guys? It's February 20th, 2025. Had a pretty cool day in the markets. It was a sell-off and then we went sideways. Didn't trade today. I caught some of the gap down last night, so I just played it cool today. Trying to walk in this payout very slowly here, but maybe by next week I can get it. So we'll see what happens. I'm not making any more promises. Daily chart. Had 3 bull legs higher, leg 1, pull back, leg 2, pull back-ish vibes, leg 3. Or you could even say leg 1, pull back, leg 2, pull back, leg 3. It's a lot of overlap, so it's not the strongest bull trend. We would want to see some sort of why does that happen? We would want to see something like this, how it's just relentless, multiple gaps, shallow pullbacks, doesn't even break the prior bars low, and then rallies for another leg higher. Instead, we did have this could be counted as a couple legs, but let's talk about what we saw here. Instead, we have multiple. I don't know how that happened. Instead, we have multiple. Like, so here's leg 1, right? But there's bear bar, bear bar, bear bar, and the bull bar. It's kind of like a flag. And that completes leg 1, pull back. The pullback actually goes below leg 1, so this is really weak. Rally, we don't even make a new high, so some people would say this is a leg 1. It could be kind of like this, leg 1, pull back, leg 2, still not a new high, pull back, leg 3, leg 1, pull back, leg 2, second leg trap in a trading range, and with that second leg having so much overlap. Within the second leg, within this leg here, there's also fractal 2 legs. Leg 1, pull back, leg 2, leg 1, pull back, leg 2, and then this leg 1, pull back, leg 2. They're all high probable trades with calibrated expectations. So what is the calibrated expectations for a trade like this? Well, you have to acknowledge we are in a trading range, lots of overlap. So if you were to buy this bar, you'd sit through a small drawdown, or you have a limit order at the EMA and you scalp out right away. If you were to hold for this close, you would see bad follow through, bad follow through, bad follow through. This bar here is breaking past these 3 bars, but doesn't close far past this bar. It doesn't close above that bar. Yesterday's bar tries to go higher, but it ends up closing right around the 24th high. And we have a gap down. So we have lots of legs. We have a wedge top into resistance. First swing high. And when we talk about trendline breaks, 3 types of trendline breaks. 1, new high. 2, equal high. 3, lower high. And in this one, we got variation 2. Pull back, same high. Well, you could say buy tick where 1 higher, but I mean variation 3 because this went 1 tick higher, but nonetheless, you guys get what I'm trying to say, that this is not the strongest type of trend. And then if you want to count this as a leg 1, pull back leg 2, this is the 3rd variation. It's a lower high. Today was the swing. So see, not very strong. Give me 2 seconds. Pretty weak. And then here we have the 15-minute chart, gap down with continuation, and then we have a small pullback trend. Not small pullback trend is the wrong word. I would say this is more of an endless pullback. Bears were getting trapped. You know, everyone was looking for a very big second leg down, and that would have been cool. I wanted to swing an options account. I went short here, a small contract, and it was like $25. So, but I didn't actually trade futures today because of yesterday. I did all right yesterday. So I just wanted to walk in. Gap down. Bar 1, bear bar after a gap down. That's good for the bears. That shows continuation. Bar 2 is a pullback. Bar 3, we're breaking out past bar 1 and the EMA, and it's a very big bear bar below the EMA. I think it's shot up to get some sort of continuation. Bar 4 is a pause bar. Leg 1, pullback. Leg 2, pullback. Leg 3, very small pullback. Leg 4, and leg 4 becomes fractal. Excuse me. There's a rally in here that is fractal, and then we go into pretty much bar 8. So what is that? 8. Bar 8 becomes the low of the day, with bar 13 being the swing high, and then bulls start to break out above that. We go here, and then I'm going to close the gap. So we have a leg 1, pull back, leg 2, pull back, leg 3, climactic, strong bear bars all closing on their low, good enough for a second leg down until we get to bar 8. This is suspicious, and it's definitely telling you that the trend is coming to an end. So if this is a good bear trend on a smaller time frame, it's coming to an end now because there's a big bar here. And here, we already know we're getting pullbacks. So there's already signs of two-sided trading. Two-sided trading here, two-sided trading here, and now we really have two-sided trading. Then we get a rally, 9 through 13. This creates a wedge top, leg 1, pullback, leg 2, pullback, leg 3. Wedge top into resistance leads to a second leg down, 18. We get the third variation of the swing. It's a higher low. Bears obviously want a new low or at least equal lows, but it does not come back down to the 8 low. Go sideways into a tight trading range, creating a wedge bottom. Within this wedge bottom, you could say here too, 30. So this is actually, I was watching the markets form, and 31 really was attractive to buy because it was after a completed structure. Leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. So it's a wedge bottom, and we've had well over 20 bars above the EMA. So like from here, obviously that's more than 20. We've had 6 days above the EMA. So on higher time frames, this is the first gap bar. I was actually looking at the 45-minute chart. I had this drawn out the other day, and I was like, this looks like a level that could get retested. And 1-to-1 was met. See, bar 6, or I guess it doesn't matter, but 45-minute chart, this was a strong reversal, pull flag, pull back, and now they're getting that leg 2 for 1-to-1. So I was like, wow, I wish I did something about that. Nonetheless, price action is fractal. The system I traded works on all time frames. I'm only using it on the 5-minute, but I solely want to expand to like the 15, 45-minute daily. It'll be fun. So why is bar 31 a good reversal? Because of what I just showed you guys the context for today. Give me 1 second. Now you know the context for today. Today could be more bullish, and this could just be a sell vacuum because it's testing the previous leg, the breakout leg. And then 31, 30, it looks like a really good short, and the market's about to collapse. 31 sold off and reversed higher, so it didn't give bears enough time to get out of shorts. So they're going to short higher at the swing high here, and then they're going to get out around the 50% level. A good trade would be to put a buy limit order above 30 because the limit order bears are trapped, and when it returns, you'd buy that for the swing, and that above 30 ended up becoming a breakout point. A bad breakout point gets you tested, and then it rallied. So you would get filled around here. It's a 30-point rally. That's really good. And that's assuming you caught this leg 2 as well. Maybe you get a little chopped up here. Maybe you get stopped out on 39. But you would make more back. Anyways, you could scalp this whole thing. Scalp, 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 and then call it good because that's the third leg. Even this kind of climactic probable channel. Every new high is getting sold. So new high, sell off, wedge bottom, creates a higher low. New swing high here, pull back, sell, rally, creates a new high, sell off, new high, sell off, new high, sell off. So bears were definitely making money in this bull trend. It's not the strongest bull trend, obviously coming after this low. We are now entering a bear regime, or at least sideways price action, because we broke below the EMA with strong bear bars for the first time in over 6 days. So yeah, the gaps today, we have some open gaps. So when the gaps stay open, that shows trending range environment. When the gaps stay open, that shows trending environment. We have 3-4 gaps from the open here. So we have these 3-4 gaps that stay open for more than half the day. They get tested a couple times for about 4 hours, and then this last gap, the last leg in the trending environment ends the first leg in a trading range. And look at the last gap; it gets closed. That's a late gap that gets targeted. Bulls want to close that because they're trapped on this tail here. They're buying, sells off. Now we have more gaps on the trading range price action of part of the day, and these start to get closed here. You can see lots of overlap. These bars get closed here. With these gaps here, this gap gets closed with this gap gets tested, and it actually stays open. So this gap stays open, and then bulls start to close the bigger gaps. Hope you guys had a good day. If you learned something, share the show. I really appreciate it. I'll talk to you guys tomorrow. I'm probably gonna start shooting sometime next month. I just want the least amount of pressure to get a payout. So yeah, I'll talk to you guys later. Thanks for showing up. I know these videos have been short. I'm working my way back into the long ones. I need to pick up some momentum here. So you guys have a good one. I'll talk to you later. Thank you for tuning in. Bye.